Hello guys, welcome back to another lovely trading video. In this one we're going to be doing some in-depth stock analysis on SPY, so the S&P 500 ETF. And to get into this, we are going to have to do some analysis on NASDAQ as well, because it's not like it's an individual stock. As it's more of a market index, it tends to move hand in hand with the NASDAQ, so you want to be kind of tracking both, because then you get a better insights where the levels are going to be. So firstly, as always, we firstly check, is there any gaps? And we can see that there is actually quite a few gaps formed across the way. However, I don't tend to pay as much attention on these gap fills on the ETFs, for the main reason being they're futures. So if you go on to /ES, which will be the S&P 500 ETF, future, you can see then there is no gaps. So that's why I don't tend to trade or look at gaps when looking at the SPY or QQQ, which is the NASDAQ ETF, because they not tend to be filled, and they trade more based off the futures than they do the ETF. So they still most likely will get filled, but they aren't tend to be levels that I would trade off when looking at the ETF instead of an individual stock. So just to get that out of the way, I just wanted to let you know that that's why I won't be doing the gap fill levels as I usually do in most analysis videos. So now to get straight onto it, we are going to be using the 4-hour and the daily as we always do, and looking at where the standard deviations are, because they will give us good insight to where these bounces most likely will be. And the first one, which we already had when I think we did an analysis video on this a while back, and we did give the level of around 430, which is where we obviously got this bounce here, and would have provided a relatively good bounce here. However, now we've broken through this, so we won't be looking to trade off this level, and instead we'll be looking for the next level, which in this case is now $423 and around 50 cents. So that is going to be our next kind of key buying opportunity. And now you'll remember I said we also need to be looking at the NASDAQ. So NASDAQ, we don't need to be using, if we're looking to get long on the SPY, we don't need to be using NASDAQ to find our buy entry. We will, however, be using it more as a price target zone, because as I said, they do tend to trade hand in hand. So if we're getting long on SPY at 423.50, and then you go on to QQQ, and you see that it might be coming into the half deviation or statistical mean before SPY comes into a deviation level, then sometimes it can be good to look in either all your profits or at least some of your profits as it's coming into the NASDAQ level. So it's harder more to predict those, because you have to be kind of watching them more of an intraday kind of thing. There you can just set off alerts, but you do want to be keeping an eye out on that. It's not the end of the world if you don't want to, so maybe if you don't have standard deviations yourself, then you probably won't be able to do that, because I can't really give you the levels in advance as well, because obviously they're different levels. If I say, for example, on QQQ, when QQQ is coming up to this statistical mean, we can say when NASDAQ's at roughly 375, but obviously we can't give you the level on the SPY, so you kind of have to be looking at two charts, which can make it a bit more confusing, but that's more of kind of an advanced way to be locking in profits and calculating targets. So what we'll do is we'll go into detail more of that at the end of it. So if you just want SPY only levels, you can get that. As if you're trying to get more accurate levels, then I'll go through the NASDAQ part at the end. But key buying level opportunity right now is 423.50. So yeah, if it comes down to there, I would personally be getting long. Seems like a low risk long and would provide good upside. If it did somehow break through there, then our kind of key target would be 410. Broke down further, 390, 387, and so on. You always know the drift if you've watched any of my videos before. It's all you're really looking at is these key colored deviations. Why do I say the colored deviations? Because they're the whole deviation. So the golden one is the first deviation, second deviation, third deviation. These dashed lines are half deviations. They can be more good just to get an insight on if a stock's pulling back, it may be at that level, but usually not something we would trade off to, just because it provides kind of unnecessary risk. Whereas we can wait for it to come into a whole deviation and we get better risk to reward, which obviously is something we want. So those are kind of our key buy zones on screen. 423 is the kind of the key one, because that's one that we're more likely to hit. The 410 is a bit of a push and will require quite a big correction, obviously, to come down to that level. The 423.50 is that key level that I personally would be looking at right now. Then where do we have price targets? So if we're getting in at 423.50, our first target would kind of be this 431/432. Why do I say that? It's because it's the closest deviation. So if you want a low risk buy entry, and then if you do get that bounce that you usually do, and you want a near enough guaranteed area to lock in profits, then that 432 is usually where it will be, because going to the closest deviation is usually where a stock will do, even if it's going to continue its downtrend, because you can think of that as more of a pullback zone. So if you're looking more just to trade the pullback, that would be our closest area to lock in profits. But if you're looking to make a bit more profit on it, which is maybe something more if you're looking to do a longer term swing trade, then we can go for a more extreme target. And for that, it kind of would be around that all-time high of around 454, because that's statistical mean. And on stocks, we don't tend to trade as much of these statistical means or locking in areas, because you expect them more to break through. But on something like SPY and the ETFs, where they don't move as quickly as individual stocks, it usually makes more of a sense to lock in profits at these half deviations, because you will see sometimes they can stall there for months. For the last many months, you can see SPY tend to just hover around this mid deviation. So when you get these larger pullbacks, it makes sense to kind of just be locking in profits there. If you're trying to put your capital elsewhere, you can get out of that trade in a relatively good time, make good profit, and then get out and do something else. And then a very close target to that, which would be a statistical mean on the daily, would be then 457. And obviously that would require that push to break into an all-time high. And then when obviously you break into a new all-time high, you don't have as much, or there's no reason really for it to start selling off, so then you can be a bit more extreme with your targets. And so if it breaks that all-time high, you can also be looking for kind of 476 all the way to 490. However, I do think even if we break into this all-time high soon, it will still take, I would imagine, quite a long time to get to that 476 and 490 level, and that's why I personally would be looking at the profits more at a statistical mean, just more on a time basis. So that's kind of our key levels. Now, if you just wanted to key levels only on SPY, that is it. Now we'll go over the NASDAQ part of it, and so I can show you what I mean by looking at the NASDAQ as well. So we will now pull up the QQQ chart, and what we'll actually do is change this so we can have them next to each other. Change them both to daily, because then we can kind of look at this a bit clearer. So we're going to delete all these levels just so we can do the charting a bit clearer. So if you wanted them one last time, you can take a screenshot or whatever right there. We're going to get rid of those so we can get a much clearer picture on it. So we're looking at both a daily on both of these charts now, and you can see they are still moving quite similar. They're both coming close into this first deviation. Now, if you're day trading it, it probably makes sense to be locking it in profits at this half deviation, because you're not expecting it to move from, let's say, 348 to 376 on the NASDAQ side, or 423 all the way to kind of 457 in a day or anything like that. So instead we would be looking more for a half deviation play as an area to lock in profits if you're looking for a day trade. And you'll see with SPY, if we hit whatever one you're maybe looking to go long on, so in this case SPY, when SPY hits our entry, so around 423.50, you may see that NASDAQ will hit this deviation or half deviation quicker than SPY can hit this half deviation. And when you see that, it makes sense to be locking off the profits using the NASDAQ chart. The reason for that is, as it's a market pullback and they tend to move quite similar, you may see that on the NASDAQ it pulls back to this level and then continues down. So then you may see that on SPY it may miss it by a few dollars. So it just makes sense to have some insight. If you see it coming into the half deviation and on SPY it's maybe not that close, it could make sense just to be locking in those profits, or at least some, just to make sure it's a winning trade. Now we can switch these over to the 4 hour and kind of get an insight into where they are on this chart. And there we go. So now using the 4 hour, on the left it is still a 4 hour. I just have the grey bit turned off because that's usually a 4 hour and I don't really like the look of it. So they are both 4 hours, if that was a bit confusing. But if we zoom in, you'll be able to see that on NASDAQ you can see it does actually look like it's moving up quicker than you do on SPY. And looks like it may actually hit this mid deviation again quicker than SPY, and if it does, and you're looking more for a day trade or even a short swing trade, it makes sense to be locking the profits on using the NASDAQ ETF QQQ instead. Like I said, it's very kind of simple. May take a while to get the hang of using two charts, but all you really need to look at is what one's hitting the deviation first. Is it SPY or is it QQQ? If SPY is hitting it first, then you can ignore QQQ, but it's a good thing to keep an eye on because sometimes you may notice that tech's doing a bit stronger than let's say financials and real estate and stuff like that, and then QQQ tends to be a lot more tech focused. So if you see tech doing strong, then you may see QQQ outperforming S&P 500 or SPY, and then it will be coming into that deviation sooner. And if you see that, again, you want to be most likely locking in profits on whatever one touches those deviations first, because like I said, it could continue. Obviously when we're buying here, we're buying at a low risk long, but we are still somewhat in a pullback or downtrend depending on how you look at charts. So you still want to be kind of reducing your risk by taking in that profit. It may not make a massive difference to your profit, but it then can guarantee that you will make profit if it comes into those deviations. So basically, in summary, whatever one, have a look at both SPY and QQQ. Whatever one is touching that half deviation or full deviation, depending on how you're picking your profit targets. For example, if you're looking to take profits at a half deviation instead of a full deviation, then you want to be looking at what one is going to hit first. Is QQQ going to hit $365 before SPY will hit $443? If it is, and you're trading SPY, then you want to be locking in profits when QQQ is hitting $365. On the other hand, if you're trading SPY and SPY also hits 443 first, then you don't even need to be looking at the NASDAQ chart. It doesn't make any difference. You just want to be looking at whatever one's first to kind of guarantee or increase your chances of a profitable trade. So I hope that was kind of clear. If not, if you have any questions, put it in the comments and I will answer. But kind of just want to give you my insight on how I look into trading kind of the overall market, ETF, and so same thing on futures. You can use the same exact tactic on the future side if you trade futures. So I hope you enjoyed, hope to see you in the next one, and that's it. Peace.